Ever wonder why borrowing money from banks and from people are expensive? Well, today we're going to be spotlighting why banks charge what they do. And I remain your host, Tolu. But before we continue the show, I'm not alone in the studio. I have Ola with me. She is a financial analyst and she's going to be breaking down all of this information for us. So, hello, Ola.
Hi, thank you for having me.
So today, I just want to know more about interest rates generally. What exactly is interest rates and how is it related to the banks?
So the way you go to a store and you want to buy a book,
okay,
and they'll give you a price. Interest rate is simply the cost of money. So if I have money and I want to give you that money at a fee, I'm not dashing you, I'm not gifting you.
Mm-hmm.
The cost of that money is interest rates.
Okay.
That's as simple as it is. So know that when you put your money in a savings account, the bank will give you interest rates. And that rate that payment is the payment for taking your money and holding it and using it for things. Likewise, also, when you borrow from the bank, you're saying, I know you have money. I'm going to pay you this amount for taking your money for a period before I return it back to you. That's just the simple idea.
Wow. So why did they now charge what they do? Because, from my observation, their rates are quite high. Or are they different from CBN's rates?
So let me start with how banking is set up.
Okay.
You can put your money in the bank and it can be in a savings account, it can be in a current account, it can be fixed deposit. What happens is that at the end of every day, there is a department in the bank called Treasury that looks at all the money that has been borrowed and then decides on what the average cost of that borrowing is. Meaning maybe savings deposit might be 4%, but maybe fixed deposit might be 12%. And then current account is 0. They will now look at the total average. That is their cost of funding. However, if, for example, the bank has maybe total money of 100,000 naira, random, and they need to give loans to make back the interest that they are paying, the central bank requires that they cannot give out loans of the whole 100,000.
Okay.
Based on regulation, the maximum they can give out is 70,000. So imagine you are going to pay.
How many percent?
It's about 70%. So liquidity ratio is about 30-ish, right, percent of the amount. So you have to hold that at. Sorry, say that again. Let me say that again.
Okay.
So there's a portion that needs to be held that you cannot give out as a loan. It's called the cash reserve ratio.
Okay.
Now that amount is somewhere between 30 and 50. There's some calculation around it. So every bank that borrows 100,000 and it has an average expense of maybe 5% or 6%, they will pay 5% on 100,000, but they can only give out loan of about 60,000. So the first thing is that the bank must put a rate at that 60,000 that will cover the cost of the 100,000 at 5%. I hope it is clear.
Mm-hmm.
I hope it is clear.
A bit.
If you want me to take it again, I can take it again.
Okay.
But long and short, they have 100,000 that they need to pay interest on at 5%. And so let's say that is 5,000 naira.
Okay.
Right? And then they have 60,000 that they can only borrow out. That's the amount they can borrow out.
So they need to give 100,000 in store.
Yes.
So they can only borrow 60,000.
They can only lend out 60,000, right? And that 100,000, they're going to be paying 5,000 in interest on it.
Okay.
Now, for them to make money on that 60,000, they must give you that loan at a rate that they will make 5,000 in interest and then make a profit on top. So if you consider it, if you do the math very well, you would realize that the minimum they can do will be about 11 to 12% on that 5,000 cost to recover everything. And that's just on interest rates alone. When you now consider they have to pay salaries, when you have to consider that they have to pay for diesel and all those things, then the rate starts going higher
so
and higher. So
are we supposed to be the one to...
So if you're in business to make money,
okay,
right, and you have cost of running that business, right, then the fact is at some point you'll have to look at those costs and say, is it worth it to stay in business? If I want to stay in business, what is the profitable amount that I can charge on the cash that I have.
Okay.
Right? So those are the things that feed into it. So a lot of times people will say that, oh, but if I put my money at fixed deposit, you'll pay me 10. So why are you saying I should borrow from you at 25?
I'm going to that actually.
Yes, because the environment is the costs, there are costs that are layered into it. So you see when diesel price goes up, it goes there. when you have to increase salary, it goes there because that's how they make money.
Wow. Because I'm like, are they making money from it? Like, is it just about them making money that the interest rate is about? Because, when you want to borrow a large sum of money, I assume that, you're going to come with a collateral, you're going to come with your, what's the word? Someone that comes with
a guarantor.
A guarantor, thank you. And some other documents that you have to prove. So I was thinking it's just because of, they're scared of you not being able to repay the loan that you're requesting for, that they had to increase, the interest rates.
So yes, there's that, but there's a baseline. So when banks are giving out loans, you would find that the big boys who they know will not run away will have a lower rate compared to Iya and Sons, right, that you are not sure of.
Yeah.
So that's where that risk premium is. But even the people that they know will pay back, even the blue chip companies, the rates are high for them because there's first the interest costs, and then there's now the other fixed costs that they have to factor in before they make profit for shareholders. So those are the things that feed into it.
So with what we've, talked about, at the end of the day, let's say it's like 15% banks collect for a loan and all of that. Are there other alternatives for people who can't really afford this percentage to get money from and get help from?
So let's pull back a little bit. Remember I started with the fact that, let's say, interest rates, when you put in your money in savings account or fixed deposit, is about 10. Mm-hmm. The question is, what drives that actual rate? That rate that you are receiving is the central bank. So I'm sure you'll have heard in the news where they say the Monetary Policy Committee meets and they take interest rates up or they bring interest rates down.
Yeah.
Now, what happens is that when they take interest rates up, everything goes up. So you would find that even though some companies or some financial institutions may be nicer in quotes than others, or cheaper, let's use the word cheaper than others, what you would find is that they won't be so far from each other, except if there's some kind of grant or funding or concession that is backing it. For example, you see some banks saying that, okay, women can borrow at 10% when everybody else is borrowing at 25%. You would check that there is some non-governmental organization that is funding or bridging that gap, or the central bank is bridging that interest expense gap. But most times when the central bank sets a rate at a certain level, everybody aligns with it. So you would almost not find anywhere else except there's something special around it where the rate would be so different.
So I'm really amazed by all of this. Is this related to just Nigeria? Is this like this trend? Is it a global trend, or is it just in Nigeria that we have such high rates in interest?
So generally around the world currently, interest rates are high, but there are different levels of high. So for someone in the developed north of the world, like US and co, an interest rate of 8%, 9% is high. But for us in Nigeria, an interest rate of 9% is low, right? But for everyone, based on where they normally would be, interest rates are high generally. And what you find is that as much as we are in Nigeria and we are thinking about ourselves and we're not aware of what's happening, there's a general trend around the world, meaning that if central banks in America take up interest rates because inflation is high, and we in Nigeria are importing from America, it means that there's inflation in America. That inflation is going to be imported into Nigeria. Mm-hmm. And so our central bank will also witness that inflation and also take up our own interest rates. So that's how everybody's connected. And when you realize that there's a reversal, you realize that over time, all the central banks will start dropping rates.
Have they ever dropped the rates?
Oh, yes, they have. It's usually a trend. It's always a trend. It goes up and then after a while, it will come down.
Okay. So we'll go for a quick commercial break and we'll be right back. Welcome back to the show. We're still on the conversation on interest rates, and I'm still with Ola. So, Ola, I was just wondering for students that are going back to school this season, what about the students' loan, mortgages loan? Are they like different in the calculation of interest rates generally?
So when it comes to, I think the first thing I should even say is that all this is dependent on the institution.
Okay.
Some institutions have different focuses. Some companies or financial institutions are particularly about driving the cost of women, for example, or they have like some mortgage. They have one of their goals is to get as many people to own houses. So when you see that, then it fits into what they give concessions for.
Okay.
Right? That's general, such that you might be banking in one bank and they might not have anything for students, and then the next bank may have. So you have to look out for it. But then I would say that generally when it comes to loans, like I said earlier, where the central bank sets interest rates determines how everybody else will now play in terms of where they want to put their own pricing. That's general. But then for mortgage, for example, you might find that some companies, some financial institutions are cheaper because maybe they have a mortgage financing license or maybe mortgage refinancing agreement. So the real answer here is you have to go shopping, right? But the caveat is most times a bank wants to give you a loan when they have your history. So that your shopping
When
might
you
not
mean
work.
shopping means you should do your research.
You have to do your research, but
Yeah.
then they might say that if you want to get a loan today, they would say that you need to have 6 months bank statement they can look at. So if you're just opening the account today, it will not work,
Okay.
right? So you won't meet up with that requirement. And it's the same thing for student loans also. There are some financial institutions that even give loans in Nigeria for people going abroad, right, to study, but you have to do your research. You have to meet up with their requirements. There will be all those guarantor, all those kind of things that you need to meet up with. And of course, the rate would be in line with market, and that's just the reality. Most times the rate will be in line with market, but at least you will get the money you need.
Thank you. But before we hop on our game, I have a question though. So what will you say about all these financial institutions that are lending our money to people that, harassing? I would call that harassment, calling their family members and all of that. Is it allowed? Is it part of, the CBN policies?
No, it's definitely not. So when you think about it, a lot of these apps, how do you really get money from them? You just download the app. They don't know you, you don't know them, you collect money.
Mm-hmm.
Now, the truth is, the way you collected the money reflects the crudeness around it, right?
Mm-hmm.
Such that they have to use the word is not it's not legal, but they end up using underhanded methods to get their money back. Because in reality, there's actually nothing to hold you with. There's actually no way to catch you. So they have to use social tools, right? Stressing family members and things like that. But fundamentally, I find a lot of times that people that draw on those apps are people that are desperate, meaning you don't have a bank account where you have 6 months flows that you can show to get the loan, and meet all those requirements, and you just need cash. So most times, a lot of people are desperate, and with that desperation, you might not even have the money to pay back. You just need to sort the problem that is in front of you right now. So that's why we hear a lot of that. However, from the regulatory part of things, it's not legal. It's something that we should, as a society, move away from. But then the fundamental way of moving away from it is probably doing something around having a credit bureau that is working, where if you borrow and you don't pay back, it's going to have impact on things like getting rent and paying rent, renting a house. That's what happens abroad, or getting the next loan. When those things start being set up, then
like your credit score
begins to matter more. So you won't just take money from one person and not pay, right?
Yes.
Then you would see those things disappear over time.
Okay, so you guys, when you borrow money, learn to pay back so you avoid embarrassment. So I have a question for you. So you just speak and then you help us to answer. I'll read it out for you.
Oh, you will read it out. Okay.
Explain how I can invest in Treasury bills. We've been talking about investments. We've been talking about how to move forward, and how can someone, a novice, invest in treasury bills?
So, first thing is, what is treasury bills? Just to keep it simple, a treasury bill is an interest rate asset. When I say interest, you would give them money, they'll pay you interest for it. That's the first thing. That's the return you will get on a treasury bill. But the unique thing about it is that you are lending to the government. So when you lend to the government, they will pay you interest on it, and then after the period, they will pay you back your principal amount, your cash, right? That's what a treasury bill is. Now, the first thing to note is that officially, to invest in a treasury bill, the minimum amount you need to have is 50 million naira.
Gay.
So that's like the official thing, right? So to invest in treasury bills, you need to have 50 million naira. And then because it has been profiled as a high net worth HNI type asset, right? That's the first thing. However, if you want to get access to treasury bills, there are other ways. There are mutual funds that invest in treasury bills. So what a mutual fund will do is that they would gather everybody's money together and meet that 50 million and then invest. And then you would, so the way to do that is to go through an asset manager or a fund manager. They have apps. Most of the stockbroking firms that have apps, they have the funds that they run, and that's the way to. And the minimum is like maybe 5K or 1K or something like that.
So when it's time for the interest to come in, they will now distribute
they will
it
now
among
distribute
all of
it
them.
exactly.
So at the end of the day, it doesn't mean like interest rate is really a bad thing. You can actually make money from interest rate.
Oh yes. You can it can be on either side, right? It could be an asset for you or a liability. If you are investing or you're the one giving the cash. So the person that is giving the cash is the one making money. So if you are the one giving the cash, then you are making money on top of it. And if you are collecting, then
what advice? I'll just chip this in. What advice will you give people or friends and family that lend money to their friends? Should they add interest rates to it, or they should just borrow the money just like that?
So when it comes to friends and family, I think it's subjective. I think also it depends on what the person is using it for. If, for example, the person wants you to run their business and the business is already running, right, then I don't think it's much of a big deal to charge, because if the other alternative would be to actually borrow
money
and pay interest, right? But it's subjective because it's family, right? It's friend, it's family. But if they are starting and they are under duress, then please keep your interest away for the sake and the interest of goodwill and family.
Thank you so much, Ola. We've come to the end of this session. I hope you learned a lot. Go back and listen. And don't forget to like, share, and leave a comment. To the next one. Bye, guys.